Hello, and welcome to the 6th episode of the Market Pulse series. So, on today's session, we'll be focusing on a couple of things. So, markets have largely been quiet since the beginning of the week. Hello, and welcome to the 6th episode. So apologies for that. So let's get this started. Hello, Charles, and welcome to the session. Hello, everyone. So on today's session, we'll be focusing on a couple of things. One is the client journey, how you basically get onboarded with trading, right from preparation up to getting a trading plan. So today we'll be focusing less on the markets and more on the process, how you get started, how you progress, make step by step, and until you become a profitable trader. So welcome, guys. If you can hear me clearly, can you type hi on the live chat? And this will basically confirm that everything is working just fine. So hi, Francis. Welcome to the session. I think we should be starting right away. So on today's presentation, there's quite a number of things that I would like us to cover. So just a moment, getting this set up. So we are going to use a very simple scenario. So let's say you're a beginner trader, you've never traded before. You are looking to trading either full-time or part-time. You want to make this your business. You want to be successful in trading, and you are wondering how long is it going to take me? What steps am I supposed to take, and all that. So today we'll be looking to answer those questions. So if you have any questions along those lines, you can type the questions in the comment section, and I'll be responding to those questions right away. So as we proceed, I would like a lot of participation from you guys. I want to know how you are doing. I want to know what's your journey. How has it been? What's the challenges that you've been facing in your trading? And we try to address that in today's episode of the Market Pulse series. So the very first thing that you need to do once you begin trading is to join us. That is the FX Pesa team. You basically go to FX Pesa website. So I'm going to try and share my screen so that everyone can see these. So this is the FX Pesa website. If you need the link, I'll be sharing in the live comment section. So just a moment. This should be quick. So there is the link to the FX Pesa website. So once you get to FX Pesa, the next thing that you need to do is to register for a real account or for a demo account. So it's all the same, especially if you are just a beginner, you can start with a demo account, practice, understand how the system works. And once you get the gist of it, then you basically transition to a real account. So both of these buttons will basically take you to the same place. You get to register for an account, sign up, and once you get ready, then the rest is about developing the skill and becoming profitable in your trading. So once you register for an account and that account is verified, you'll be able to install the trading application. So the trading application is called the MetaTrader 5 trading application. This is how it looks like on a desktop. You can install the trading application on your smartphone. You can install on your tablet or even on your desktop. So once you install, then the rest is easy. It's basically about learning. So when it comes to learning, I have a special course that I've prepared for you guys. It's available on YouTube. So if you just go to the FX Pesa channel, so the trading application. From FX Pesa channel, you'll be able to see the special course that will help you transition from a beginner to a pro level trader. So the link to the FX Pesa channel is right here. And of course, I know you guys are already on the channel, so no need to share. But just in case you need the link, I'll be sharing directly on the comment section. So from here, just scroll through. We do a lot of content each and every day covering different topics. You can see there's a series that I'm doing on Tuesdays called Markets at a Glance. And these are basically a live market update of what's happening in the markets, what's happening in the news. And once you understand all this content, then you're able to transition your journey. So besides these, there's Bollinger Bands. squeeze breakouts, and these are series by Edwin Wangai and Robert Mbogo. We covered the various topics. One, you can see trading with pivot points, track momentum with the ADX indicator, how trade channels, trading the inside buy and all that. So besides these, then there's the Market Pulse series. This is the one that we are covering. So on each and every episode, we cover a different feature about trading. So in the last couple of episodes, we covered how to trade Euro USD, how to trade the S&P 500, how to trade gold and silver, how to trade Bitcoin and Ethereum. So all of this has already been covered in the previous Market Pulse series. So the series that we are more focused on for a beginner is the Novice to Pro series. So it's a 10-episode series, basically designed to help you transition from a complete beginner to a pro level trader. So if you skip through and get to the first episode here, just give you a highlight of what it's all about. So if you go to the description of the episode here, you'll notice the description for the series. So in this episode, I cover registering for an account, downloading and installing the MetaTrader 5 trading application, logging in, understanding the market watch section, understanding how price is formed, opening and customizing your charts, executing your first order, setting your stop loss and take profit orders, as well as reading your charts. So this is something that you cover at a very basic level from the very first episode. So in the 10-episode series, you can see what we cover. 2 is charting skills. So an entire episode covering charting skills. Sorry for that. So on the third episode, tradable assets. So you look at all the assets available for trading on the platform. So we basically cover a description of what Forex trading is. We look at currency pairs, the features surrounding the currency pairs, market sessions and all that. We then jump to stocks, how you trade stocks, the stocks available on the platform, how you execute a trade in stocks. We do commodities, we cover gold, we cover oil. We also look at stock market indices, we look at the S&P 500, the Dow Jones, the NASDAQ, and all that. So in one full episode, you get to learn all the tradable assets on the platform. So besides this, we also look at knowing your candlesticks. So an entire episode that is dedicated to helping you understand what candlesticks are and how you use them in your trading. Then there's market structures, and these are basically patterns that we normally observe in the markets. These could be channels, sideways movements such as consolidations. We look at ranges, we look at wedges, triangles, and all that. Then there's trading strategies. Here we look at how you analyze the markets. We look at technical analysis, fundamental analysis, as well as sentimental analysis. So we look at the basics or the foundations of trading strategies and why you need them. We look at how you basically combine several approaches to create a trading system. So under trading strategies, we look at momentum, following the momentum of the trend that the market is taking. We also look at contrarian trading or counter trend trading, where you look at exhaustion in the markets and trading in the opposite direction. And at the same time, we also look at value investing, where you basically look at the discrepancy in value versus pricing and execute your trades along that path. Then also we look at risk management, how you determine the risk for your particular trade, how to weigh that, how to set your stop loss, take profit at the right levels. And once you understand risk management, it becomes easy for you to trade without making excessive losses. So this basically helps you manage your risk, and it becomes an easy way to approach the markets. Then there is understanding market news. This is more or less fundamental analysis. We look at things that you need to look for in order to execute trades in Forex, things that you need to look for in order to execute trades in stocks and as well as commodities. Then in episode 9, we cover building a trading system. So building a trading system is pretty simple, but if you're very new, then you might go around the internet meeting more and more systems that you don't understand. But once you understand the basics and the foundations of a system, then it becomes easy for you to develop your own system, one that fits your investment needs as well as your goals and objectives in trading. And lastly, it's more or less like a psychological lesson, putting all the lessons together, combining them into one profitable trader. So once you go through the series, that is the 10 episodes, then it becomes easy for you now to trade actively in the markets. However, this does not guarantee you to becoming a profitable trader. So there is more steps to be taken. So you might learn the first 10 episodes, practice the ideas they're in. So if it's a market structure such as this one, this is basically a triangle, then you learn how it works, what it means, and how you trade the breakouts. So some of these concepts becomes easy, but they only help you in one thing. You get to understand how to develop a market edge And once you understand the edge as well as managing your risk, then it becomes easy for you to trade on a live account. So by the time you have covered the 10 episodes, it should be easy for you to get a live account, fund that account with some small amount of money. You don't have to start with $1 million. You don't have to start with $10,000. You can literally start with a very small amount. A common amount I've seen a lot of traders start with is roughly between $100 and $500. So with these, you're able to execute small trades. Let's say you risk $2, you target $5, you risk $5, target $15, $20, and so on. So it becomes easy. And on the other hand, if this is your first interface, you get to understand the emotional side of trading. Remember, if you're paper trading on a demo account, you never get any emotions. So if you executed a trade, you're trading a full lot, you go to sleep, you'll never wake up wondering where the market is or how much profit you've made and so on. However, the moment it gets live, it's real and it's your own money on the line, then it becomes very serious because it can strike a lot of emotions. So I remember the first time I started trading, I had a lot of challenges. I would wake up in the night just to check on the markets, how my trades are performing. And as a result of these, the trading process would be very tedious. So in today's presentation, we cover how you get over that. You get to build upon that skill. You get to build the right discipline, the right approach to the markets. And once we get that covered, then it becomes easy for you to trade as a professional. So there's a good question here from Charles. Please, could you explain to us what a buy stop order is and sell stop order and how they are praised on a trade? So, so excited. I made it for live. Thank you, Annette. Thank you, Charles, for the questions. I'll be responding to this as we progress. So the moment you've gone through the course and now you understand to, let's say, do your own fundamental analysis, you can do technical analysis, you can identify trading opportunities, you have a plan, and also you have a risk management plan, then there's still more to that. You have to become more or less of an analyst as well as a trader in order to improve on your odds of winning. And once you get this done right, then it becomes easy for you to trade professionally and become consistently profitable. So there is a couple of things we will be focusing on. And one is building an investment plan. And this is something that you need to get right from the beginning. So as I mentioned, there's always the amount of money that you start with your first trading account. So you may start with $100, you may start with $500, depending on your risk appetite. But then eventually you will need to have an investment plan. You don't just trade for the sake of it. You have a goal to make money and build wealth in the markets. So the way you do this is by first having a plan. And a plan basically starts with a goal as well as a time frame. How much money are you looking to make? And after how long are you looking to make this money? So are you looking to make $1 million? And if so, how long do you target making that $1 million? So that's a question that you need to get right at the beginning, so that every time you open your trading application, every time you get to your trading desk, you need to know what you're working to achieve. So let's say you start with a small goal. This could be something like $100,000. So you want to achieve $100,000. You want to achieve 1 million Kenya shillings. And you want to do this, let's say, within 1 year or even within 2 years. So we all know that if you start with a very small account, then the chances of getting to that goal become smaller. And at the same time, it takes longer. So you need to build an investment plan with an additional reinvestment plan. So it doesn't mean that if you start with $1,000 and you're looking to get that account to $10,000, that's it. And you're going to be profitable, making profits until you get to $10,000. So you also need to have a reinvestment plan. So you might start with a small balance. Let's say you start this month with $500. And then you trade that amount. Let's say you make a profit of 20%. So in that case, you will have an additional $100. So now you have $600. So next month, you might want to add some more money to that account. So let's say after working and you have some more savings, you add $400, and now you start the following month with $1,000. Now, if you trade with that $1,000, let's say you trade for a month and you make, let's say 10%, then in that case, you'll have $1,100. Then if you decide to redeposit, let's say you add even $400 more, now you are at 1,500. So from then, let's say you make 20% of 1,500, that would be around 300. Now you get to 1,800 by the third month. Then you deposit another 400. And this way, you will find that you're experiencing growth from both the profit that you're making in your trading account and also the reinvestments that you're making in your account. And that's just an example of how you can have a plan where you keep on adding more money to your goal, making sure that you're getting closer and closer to your target. And at the same time, you are doing consistent trading activity. So you need to develop a plan and determine this is the amount I'm investing now. So for some other traders, it might be a one-time investment, and then you start growing that account. And for some other traders, they may not have all the bulk money to start right away, but they build that position bit by bit. On the other hand, let's say you are looking to invest in shares. So if you're looking to invest in shares, you might be discouraged, especially by traditional limitations, where, for instance, in the NSE, you had to part with about $100,000 Kenya shillings to get your first shares. So with FX Pesa, there's no limitations. So if you go to, let's say, shares trading, I'll just show you an example. Let's say we take one example here. So I'll be just finding one share that is actively trading. So quick one, let's start with Bumble. Bumble is one of the recent stocks. It's basically a dating site that is listed in the New York Stock Exchange. And the CEO or the founder is one of the youngest female billionaires in the world. So if you have some time, you can go and research Bumble company. So let's say you've done your research and you've identified that there is a strong potential that this stock will go up. So right now, as we speak, one share is going for $23, 23.65 to be specific. So now, if you want to get started and building a position in this particular stock, you're not limited to buying 10, 100 shares or anything of that sort. So you can literally just buy one share. So you just go to new order and then you indicate the number of shares here under volume. So this is one, click buy by market, and that's it. Now you have one share here. However, this does not limit you to buying more. So you might start today with a couple of shares. You might buy 10, you might buy 2, you might buy 100, depending on your financial position. And then next month, you come back and then you buy some even more of those shares through a process called dollar cost averaging. So dollar cost averaging is a technique that we use when you're trying to build a position in a stock by buying small amounts consistently. So you might have, let's say, 12 trades where you are buying consistently. You buy this month, the next month you buy the same amount, the other month you buy the same amount. And by the end of the 12 months, you realize that you have built quite a strong position that you yourself will be, you'll be proud to have built such a position, and then you can hold onto that position maybe for the next 1 year, the next 6 months, and so on. So that's one of the strategies, especially when you're looking to build a position, a long-term position. This could be in stocks, it could be in indices. And once you do this, then over a long period of time, if the stock proves to be profitable, then you get to realize some good returns from that investment. So you have the full control. Nobody is controlling you. So depending on your plan, you always just access these from your device. Could be your smartphone or your laptop. You deposit money, buy those shares, do some other stuff, let the market do its thing, come back again, buy some more, and keep building that position. So over a period of time, you realize that you've built such a strong position that the rewards start making sense and you start getting some good rewards from your investment. So a good question from Nicholas. Can you be profitable trading on a mobile phone? Yes, you can be profitable trading on a mobile phone. I know traders who are doing so, trading on a mobile phone. However, when it comes to the ideal trading system, you need to get serious about trading, and you need to at least get a trading desk. And this is the area or the location where you execute a lot of your trades, and at the same time do a lot of your research and record your trades. Sometimes we screenshot our entries and exits, and it's way easier when you're doing this on a laptop could be a tablet or even a desktop. So one of the challenges that people face, especially when you're trading on a mobile phone, is one, the screen is very limited. It's a very small screen, and that screen doesn't fit a lot of candlesticks. So especially when you're doing your analysis, it's even harder to draw your trend lines and analyze the markets. So it's easier when you have a device with a bigger screen, and it becomes easier to focus on such trading activity. So the other key thing is that the mobile phone is not just used for trading. You realize that there's so many apps available on your phone, could be WhatsApp, could be social media sites and all that. And all of those applications are searching for your attention. So you will get a lot of distractions if you're trading on a smartphone. These could be phone calls, messages, could be notifications and all that. So it's very easy to get distracted, especially when you're trading on a smartphone. So if you have the capacity to buy a laptop or a desktop computer, then these will get you serious about trading. So when it comes to a trading desk, there's a couple of things that you need to invest in. One, you need a nice, quiet environment where there's a lot of distractions. The other thing, you need a good quality laptop, one that is able to facilitate efficient trading without hanging or anything of that sort. You also need to make sure that you have proper lighting. You don't want to be trading in a dark room. This is something legal and very serious that you're doing, so you don't want to be hiding. So you also need to make sure that you have the right seat, especially if you're going to be seated there for long hours. So make sure that it's a comfortable seat. If you can get a gaming chair, even better. And also make sure that you have access to basic amenities. Make sure that your trading station has access to clean water for drinking, maybe some microwave to warm some snacks. Sometimes you get hungry. And if you can, even getting some coffee maker would be a plus for your trading desk. So you might also want to get an extra screen in order to, let's say, watch the news, what's happening around the world, have some live streams and a couple of indicators on there. You can do this by having an extra display or even on a smart TV. So those are some of the basics that you need to add to your trading desk. So once you get this figured out, and I'm talking about an investment plan, and this has been set in writing, you can even pin that on your trading desk. Then the next thing is your trading rules. This is very, very important. So the trading rules are there to protect you from your own emotions and to protect your account from yourself. So sometimes we get excited, you've made a couple of profits, and then you realize that you are adjusting your bets insignificantly. Your bets illogically. You realize that at some point, and I've seen this with a lot of traders, you have been trading consistently, let's say with a very small lot, 0.01, you make $4, you lose $3, you lose $2, you make 5, you make 10, you lose 3, you make 5, you lose 4, and so on. So you might do this consistently and realize you're making some good profit, could be 10, could be 20, and then at some point you start getting cocky. So you start feeling like if I was trading on a higher margin, if I was trading on a higher leverage, then I would be making more, and you deviate from your plan. So this is a common mistake that a lot of traders do, that you find yourself executing a much bigger lot than you're comfortable doing. So if you've been consistently working, let's say with a lot size of 0.02 or 0.5, and it has been working for you, you realize that you want to now trade lot 1, lot 2, and so on. So that's a wrong approach. That's your emotions working against you. That's your grade working against you. And eventually you'll find yourself making mistakes. So you need to treat trading as a business. So you need to predetermine your risk per trade. This could be a percentage of your margin, or it could be a number, a dollar number, where you decide that between today and January next year, I will be trading and risking $30 every trade. So when you cast that in your trading rules, then you pin that on your trading desk. Every time you execute a trade, you will be checking on those rules and deciding that I'm sticking to the rules, whether there is news or not. I am risking $30. If I win, I win. If I lose, I lose. So that's something that you need to treat very seriously. If you find yourself breaking those rules, then it might become harder for you to become consistently profitable. So you have to really think about that and determine the amount that you'll be risking in every single trade. So one common mistake that I've been seeing a lot of traders do is, for instance, let's say there's some form of news announcements in the market, and as a result, price makes a big spike, like we saw here last week. So when price makes a big spike, you'll find that normally, you'll find that most traders, if let's say they are buying here, they are used to set a stop loss somewhere around here. But now they don't see a support level here. So they look at the next support level, which is significantly lower, let's say below this area here. But these, if they trade the same lot size that they have been trading, then it means taking a much bigger risk that they normally take, since they have a very long candlestick here. So what most beginner traders will do, they'll basically execute a trade and then set the stop loss all the way down, which would basically represent a much bigger risk appetite than they would otherwise do on a normal setup. And this is why news can be very risky. So you need to make sure that you maintain the same risk appetite as always, even if you are seeing a lot of volatility as well as news in the market. So one good trick that you can use this is by lowering your lot size and increasing your stop loss. So sometimes it makes sense. For instance, let's say we do an example here. You trade one lot size, and this is US 500. Let's say you go for a buy trade, and then you set your stop loss here. So this is $2,000. So let's say you want to risk $2,000, but the market is very volatile. So instead of doing this, you might do the other way around. So you go to new order, and instead of setting a lot size of 1, let's say you do 0.5. And now you still do the same trade, but then when you set your stop loss, instead of setting it here, you take it all the way down to $2,000. So in this case, the stop loss will be a little bit further from your entry. You'll have more room to cover more volatility, but the lot size will be significantly lower. It was 1, and now it's half. It's 0.5 lots. So you will still be profitable, even if you set a larger stop loss with a smaller lot size. So you don't have to be impatient. If the trading idea is right, then it will play out. Then if the market decides to work against you, then that's still okay. You are trading within your risk limits. So that's something that you need to consider very seriously. So avoid the mistake of looking at a big spike in price, and then you take a very unreasonable price. So as we proceed, keep the questions coming. I'll be responding to the questions as we go. So is there a course on your website on how to trade these pattern shapes, triangle shape? Yes, I've done this. I've covered market structures, and it's available on the Novice to Pro series. I've shared the link in the comment section. You'll see the YouTube channel. Go to the Novice to Pro series, and you'll get to understand those patterns. So it's literally very easy to trade those patterns. And of course, on top of that, you can even Google how to trade any pattern. There's so much content available, whether it's on YouTube or even on Google. So if you just go to Google, how to trade triangle chart patterns, that's it. It will literally get you all the content that you need. So for instance, this is from the Balance Money. Basically, you'll have all the descriptions, understanding the patterns, the breakouts, entries, exits, and even where to set your stop loss. So it's something you can literally do, and it's pretty easy once you understand how to do it. So the other part, once you've developed your trading plan, you've set your trading rules, the other part is to manage your expectations. So it can be a little bit tricky if you are technically depending on that live account to pay your bills and honor or your bills. You're paying your rent, school fees, buying food, and all other costs based on that one account. So it's very important that at some level, if you have a way of earning an extra income besides trading, then these will reduce the pressure that your account may experience as a result of your trading activity. So I know from an experience that if you purely or totally depend on your trading account to live, then you project those expectations to your trading account. So if you have a bill that is due, it's end month, you need to pay your rent, and the account has not yet made sufficient profit, you'll find yourself forcing trades in order to make that money quickly and then honor your bills. However, remember, the market will always do its thing, whether you are not there or not. So this is a game of patience. You want to be as patient as possible and wait for the opportunities to come to you. You don't want ever to find yourself forcing trades. So in that case, you need to be very patient with your account. You need to be very patient with what the market does. And the only way you do this, sorry, apologies for that. These things have a really bad timing. So when it comes to your account, there will always be weeks when momentum is very strong, and there will be weeks where the market is very quiet. So for instance, today being Thursday, this is the first time we are seeing a move. Yesterday was largely quiet in the US 500, not much movement on Tuesday and even on Monday. So for this period, if you look at this area here, or even from Friday last week, literally, we can see that this particular market was just moving sideways. So this was the relative direction in price. So price was not going up, down, it was just ranging and moving sideways. The first real move happened today when the S&P 500 broke to the lower side and moved down to this particular support level here. So sometimes the markets will be just quiet, not making much movements, and that's completely okay. In most cases, whenever the markets are quiet and moving sideways, it's often in preparation of a potential move in future. So you want to be watching those consolidations so that you can trade the breakout. For instance, we can already see something happening in Bitcoin. Let's see if I can see the chart. So Bitcoin and Ethereum are largely moving sideways. Awesome. So this is Bitcoin on the 1 hour chart. So 1, 2, 3, 4, 5, 6. So for 6 straight days, you can see there is much movement in this price. So since getting to this bottom, there was movement up, down, and then down, up, down. And this is the current price level. So you will notice that the candlesticks are getting smaller and smaller in range. So no much movement, almost complete sideways movement yesterday. Today, largely quiet, slight break towards the upper side, though doesn't show some strength. So if you'd be seeing candlesticks like this happening on the break, then this would make a lot of sense. So if you could get such a break happening, let's say at the end of this triangle here, and you get some very strong candlesticks happening here, then it will give us a direction that Bitcoin is now expected to continue the break upwards. However, for now, the movement here is largely quiet. And if you are to zoom on these and look at the movement since the beginning of the day, it's largely sideways. So it's barely some significant break to the upside. So at this point, once you understand reading these candlesticks and getting what price is telling you, then it becomes easy for you to identify trading opportunities. So most of the time, you'll find that a lot of traders will spend a lot of their time looking at the ticker charts as well as price movement. So let me show you the common beginner mistake that I normally see with a lot of traders. So first, let's say you have a trade here, and this is, let's say, US 500. So this is the trade that we just executed in US 500. So most traders will go to the 1 minute chart and they will start looking at this price. So you can see that there is a lot of noise here and volatility. So for instance, if you are looking at this price chart here for the last 20 minutes, you would be observing this movement up, down, up, down, up, down. And literally, there's nothing you're changing. The only thing that is changing here is you. You are the only one who is changing the emotions. You're starting to doubt yourself. So why did I buy here? Maybe I should have waited a little bit longer so that I buy a little bit lower. Maybe I should not have entered this trade at all. This thing is going down. The candlesticks are getting bigger. Maybe I should get out of this trade and then look for a better trade. So those are the kind of thinking that you'll find a lot of traders doing, watching the 1 minute chart. And they could do this for an entire day. So we'll be just watching the ticker chart, gets green. Maybe I should add another trade. And if it gets to break even, I exit. So you'll find yourself thinking a lot about this. And sometimes you get the temptation, especially if you could get one strong candlestick going up, then you add to that position. You think this thing is now going up, you add some more. And you are basically trading against your own emotions, and it's not something that is principled. So by the time you're executing the trade, let's say you are doing this on the 1 hour chart, let's say you based this on the strong green candlestick here, showing you that there's a rejection of these lower prices and there's a potential that the price could go up. So remember, this doesn't have to move in a straight line. Sometimes the market will pull back for a while before continuing in your original desired direction. So you have to be patient with the markets immediately after you execute your trades. So as part of your trading plan, you need to have entry rules and rules to manage your trade once you are in. And these are the tough ones. Identifying rules that determine your entry, it's easy. You can literally Google them. You can find a lot of successful trading strategies that give you an edge. But then how you react to price movement as long as you're within the trade is also very much important. So you need to predetermine your rules. You need to know when you're going to check on this trade. So are you going to be following every tick, looking at every 1 minute movement? Are you going to be following every 5 minutes or 15 minutes? You can even set a reminder. Let's say you are strictly doing 1 hour charts. So in this case, you'll only be looking at the price once the price crosses one candlestick. So this particular candlestick right here will only close once the hour is up, and that is at 8:59 p.m. as we get to 9 p.m. So the moment you get to the 9 p.m., you can set a reminder on your phone, go and check how price performed in that 1 hour, and then make a decision based on that. So this is how price crossed the last one candlestick. Should I continue holding the trade? Should I move my stop loss towards my entry point, or should I exit the traders at this moment? So those are some of the 3 basic decisions that you need to make. Either hold the position, adjust your stop loss towards entry, or exit the position. So you need to have rules determining how you do one of those 3 things. So once you get that written down, and now you understand what you are doing, you know how to do this before entering a trade, then it becomes easy and the entire process becomes something that is more comfortable. So with this in mind, you are not going to have sleepless nights wondering where the markets are or how they are performing, especially when you are trading within your risk parameters. So once you get this covered, it's also pretty much important to meet other traders, interact with other traders, know what they are doing and how they are approaching the markets, and how they address some of these challenges. So once you understand how they tackle some of these challenges, then you can borrow some notes and use them to your advantage. So I'm still getting questions about the market, and I mentioned we are not covering stuff on the market today, but hopefully we'll have some minutes to look at that. So we'll be interested on views in USD trajectory, likelihood of it recovering given CPI data, retail sales. Awesome, I'll be looking at that. What is the expectation on silver? How can I plan as a part-time trader? So as a part-time trader, there's a couple of things that you need to understand. You need time to do analysis in the markets. So you need to dedicate some time where you analyze the markets, identify key price levels, and then the rest becomes execution. So let's say you have identified that you'll be trading triangles. So let's say at the end of the day, you sit back, you watch your trading application, you go through the assets that you focus on, and you realize that out of all these assets, the only potential triangle that we are seeing here is, let's say, on Bitcoin and Ethereum. So you can see there's a triangle here. You go to Ethereum, you notice that there is also a triangle here. So once you understand that now this is premium, and you might be looking for a trade in either direction, whether the market breaks up or down, then as the market approaches the vertex or the apex of these 2 trend lines, you want to be monitoring the breakouts. This is something you can do on your phone. So remember, you don't trade on your laptop and you can't trade on the phone. So you do all these analyses and then you decide that after every 1 hour, I'll be checking on how the markets are performing. So when you're doing your other job, you can just simply log into your smartphone, see whether there's a breakout, and then continue doing your work. And then after another 1 hour, you check, see whether there's a breakout, and then you continue doing your work. If you identify your breakout, then you know exactly where to set your stop loss, how much to risk in that trade, and where to set your take profit. And once you do that, set a reminder. Let's say you'll be checking on your trade after every 4 hours, can be 8 hours, or even 24 hours. So you will be able to continue doing your other stuff, as well as you know that you're trading within your risk parameters. Wait for the market to do its thing. It's either of two things. The market will either hit your stop loss or your take profit. And then you take on the next trade, and then the next trade, and the next trade. However, besides doing this and setting those reminders, you also need to make sure that you dedicate some time. This could be 2 hours of your day, where you just go through what's happening in the news, what has changed, what are the news you're expecting today, what are the news you're expecting this week, how did I perform last week, how did the trades play out, how is the setup doing so far, am I obeying my rules? You basically cover that within 2 hours. So you look at the potential trade setups, look at the markets you're interested in, and then focus on those markets and potential opportunities that appear in those markets. So you might do that within 2 hours, and then the rest is something that you can basically access from your phone. Just log into the same account, check how the market is performing. From the could be lunch hour, you look at what the market is doing. Has it broken the targets that you had set? So for instance, let's say this is my trading pattern here. This is Ethereum. I want to trade if there is a significant break, and this is let's say an area around this level here. I can map it with a line here. So let's say 1249 or even 1250. And then I set another one here at let's say 1148. So if the price breaks and gets to 1249, then I'll be looking for a buy position. If it breaks and gets to 1148, then I'll be looking for a short selling position. So for you, you just from time to time check on your trading application on your smartphone. Has the market broken this level? No. Then check later. Has the market broken this level? Yes. And then go for the trade, set your stop loss, take profit, and then set a time management to trade your trade, where this could be after 1 hour, 2 hours, or anything of that sort. So you have to determine whether you're trading short-term or long-term, and then monitor your trades consistently to know and react to the market movement. So that's one of the ways that you can do it. So another good question, how do you use fundamental analysis to predict the magnitude of the news on the charts? So this is something that we have already covered. It's on the Novice to Pro series. I think it's on episode 8 where we cover fundamental analysis. So there's various data points that basically help inform the central banks when they're making decisions about monetary policy. So for instance, the US right now is majorly focused on consumer price index or inflation data. So the fact that the Fed has said that consistently in its speeches, then it makes it very important news for investors, so they know that this has the potential to move the markets. So it's basically about following Fed policy. If you're trading the US dollar, if you're trading the euro, you follow the ECB and speeches from the ECB president. You're following the pound, then you follow the Bank of England and also the MPC members and their speeches and so on. So, hello, Mchichi, and welcome to the session. The best risk management plan, it's an episode that we have covered. It's live. It's available on the FX Pesa Novice to Pro series. It's available on the channel. So kindly, for some of these basic stuff, we have already covered them in a 10 episode series. It's called Novice to Pro. Just click on the channel and you'll find the 10 episodes. Right from the beginning stuff, what is a candlestick, what is a bid, what is ask price levels and all that. So we have an entire episode dedicated to risk management and it covers all these. So hopefully if you take some time and go through it, it will give you the result that you're looking for. So there was a question, could you explain to us what buy stop order and sell stop order are and how they are placed on a trade? So this is a good question. So let's say you're very busy and you don't have a lot of time to monitor these breakouts. So you don't have to miss out on the opportunity just because you're not there. You can use buy stops and sell stop orders to basically enter the markets upon a condition in the market, whether the market meets a certain price or not. So one way to do this, you go to new order and then basically go to pending orders and then select a buy stop order. So set the price, in this case is that 49. So let's say we do 1250 just to get it visible. You place your order there and you'll have your order right there. So sorry, I want to delete this line. So I'll go to object list, delete my horizontal lines. So here is our order, the green dotted line. So it's a conditional order, it's a buy stop, telling the broker that if the market gets to this level, then buy me 0.5 contracts of that asset. So in this case, this is a conditional order. So if price ever gets to this point, then it will execute a buy order. And in this case, if price going up, then you make profit. If it goes down after that, then you make a loss. So you can modify that trade and set your stop loss. So let's say you want to exit if Ethereum goes back to 1200. So you modify, and now the order has a stop loss. So if price breaks out, gets to this point, and then goes back to 1200, then you exit with a loss of $25. On the other hand, you can also set a take profit, you modify, and then you set your profit target. So let's say your take profit is something like 1350. And then you modify, and now you have a target here. So if price breaks this point and keeps going up and gets to this level, then you exit your trade with a profit of $50. So now you don't have to do anything. You just wait for the market to break. If it gets to this level, activates your buy, gets to this level, takes your profit, and the profit is added to your balance. So you can still do the same on the selling side by setting a sell stop. So you can go to new order, set a sell stop, pending order, and then a sell stop, and then you identify the price at which you'd like to sell. So let's say it's 1145. So place your order. This is our order here. Conditional, telling the broker that if the price drops to this point, then sell 0.5 contracts. So modify, then set your stop loss. Stop loss would be on the other upper side this time. So let's say it's 1180. And this is just something random that I'm just doing for display. And then a take profit of, let's say, 1090. And then you modify, and that's it. So your stop loss is here. If market hits this point and goes back up, then you lose $17. And if it hits here and goes down, then you make $27. So a very simple conditional order. That means that if the price gets here and you're not there, you still take advantage of the opportunity. So I'm hoping I've answered your question. So good question. What advice would you give a retail trader with small capital allocated and wants to scale up? So if you have a very small amount of capital, let's say you're trading anything below $1,000, then you might need to do two things. You need to understand that there is a lot that you can make within 10 years and a very small amount that you can make within the next couple of weeks. So you need to expand your time horizon. The markets are not going anywhere. You're going to be in the markets for a long time. So with this understanding, you should focus on the percentage that you make. So if you're able to make 10-20% consistently every month on your trading account, then you can also make the same 10-20% even with $1 million account. So in this case, you would be focusing on growing that account balance. So if you have the skill, then the money is not a problem. If you don't have the skill, then the money is still a problem. So you need to solve one thing first. And that one thing is having the skill, that is being consistently profitable. So if you have a small account, think in terms of percentages, don't think in terms of dollar amounts. So the other thing that you need to understand if you are a beginner trader and you are starting off with a small balance is that when it comes to trading results, they don't compare. So a person who is trading $10,000 might only be targeting 10% or even 20%, and that is sufficient for them. But for you, you're looking at 100%, 200%. And in order for you to achieve that, you realize that you are taking more risk, significantly way higher risk than the guy who is targeting 10%. And in that case, the chances of you wiping out your account increase significantly. So one of the ways that I found to be very efficient for me, and I don't know if it applies for any other person out there, is by having a secondary income. So if you have a secondary income and you're focusing on trading as a long-term business, then you will not be having a lot of expectations on that account. So if you have another income where you are able to honor your bills, you're able to have some surplus income, those your bills, entertainment, and buy some stuff for yourself, then your trading pressure, or your pressure that you put on your trading account, reduces significantly, and you're able to focus on the process. So if you have a secondary income and you have a longer term perspective, then it becomes better. So that, as I mentioned, an investment plan. What are you looking to achieve with your trading? So if you're looking to achieve a long-term goal, then you should have a plan. This is the amount I'm risking, this is the amount I'm expecting. So once you achieve those goals, then you find some satisfaction from your trading besides the dollar amount that you're making. So you might find yourself making a good run. Let's say in a month, you've made 50, 100% within that month, but you are not happy because of this of the amount you've made, but as a result of the getting closer to your target. So in that case, you'll not get overexcited and take more risks. You will still be focused on the process because you have a goal to achieve. So a good question. In your trading career, when would you say you are at your peak performance? Trading alone or with a team? It has always been with a team. When I was trading alone, I was not at peak performance. Sometimes I would make a lot of mistakes. You would find me banging stuff in my house, and I don't want to ever repeat that process again. I always like having a close team, and close team doesn't mean having guys in a physical area where you meet to trade. If you have access to that, well and good. But we are living in the digital era. You can build a community around you through the digital medium, where you basically consistently chat, share ideas with other traders, share updates. What do you think about this idea? Am I going off? Should I go for this trade? What do you think about the Fed? What do you think about the ECB? Do go and that way grow as a team. So if you have a team, the next one. So sorry guys, for a moment, I lost my internet connection. Now I'm back. So how does one calculate PIP value? And this is pretty simple. So you basically use your paper trading account or your demo account. So let's say you have this trade here. Let me close this one and use this other one. So if you're looking to trade one lot, let's say one lot of an asset. In this case, we're looking at Bumble shares. So in order to know PIF value, you trade one lot and look at the movement. So just go to the profit section here, right click, go to profit and select as points. So this way, you'll know that the market is down -4 points and this is worth -$0.04. So 1 point will be negative, 1 point is $0.01. So this way, if you multiply by 10, then 1 pip is $0.1. So just try the idea on the demo account. Look at the points versus dollars, and this will tell you the PIP value. So that's the simplest way you can always test all assets to make sure that you have the right PIP value for that particular trade. So Thank you very much, guys. Thank you for your time. I hope that this particular session was helpful, and I hope to see you guys on the next session.